illumination of NG. Don't forget to subscribe to the YouTube channel and also click on the notification bell so that you can be notified whenever I drop a new video. So today we're going to continue with our company account, and also we're going to look at the issue of share and also the appropriation of the profit made into the various reserves. So we know that when organizations make profit, this profit is shared by those who are the shareholders. They can be the preference shareholders, they can be the ordinary shareholders, okay? And some of these uh, profits being made are either transferred into various reserves. Likewise, some are retained in the business for further operational costs, okay? So we have a question that we want to look at today, and we're going to treat the question as you can see on my screen. So let me further expand this a bit. So we have Trampoline Limited as an authorized share capital of 200,000 naira dividend, sorry, divided into 160,000 ordinary share of 1 naira each and 40,000 6% preference share of 1 naira each. We were told that 120,000 of the ordinary share has been issued and fully paid, while all the preference shares were issued and fully paid. So it means that out of this figure of the authorized share capital, out of this figure that we can see here, this figure that we can see here, this figure here, this figure here, we're told that only what was it called? 120,000, 20,000 were issued, ordinary share issued. Well, out of it, we have 40,000 preference share. So this means that out of the authorized share capital, the issued share capital is just 160, of which the remaining 40,000 naira worth of capital has not been issued. Okay, so we have the issued and the unissued, which is hereby settled. Okay, so we're now told that while all the preference shares were issued and fully paid, the profit after taxation for the year ended at 1st of December 2020 was 49,000 naira. Okay, the profit and loss account had a credit balance of 24,000 naira as at 1st of January 2020. Okay, so let us just write down here and say notes. Let's put it down here, notes. So we have the notes to the account. So let's just put that down here. Notes. We have the notes. Okay. So let's look at the questions one by one. We're told the profit after taxation for the year ended December 2020 was 40,000. Okay, and the profit and loss account had the credit balance of 4,000 naira. Okay, now the additional information that we have it write off preliminary expenses of 1,700 naira in the appropriation account. Okay, so let us start this and call this trampoline. So we have Trampoline Nigeria Limited. Trampoline Limited. So let me write that down here. We have Trampoline Limited. Okay, Trampoline Limited. Let me check this. Okay. So let's move on. Trampoline Limited. Okay. So okay, let me just read that appropriation account, appropriation account for the year ended, account for the year ended. Okay, and then, so we have debits, we have credits. Okay, so we have on the other side. So on the other side. So we have, let's start with the profit brought down. Brought down. That is 24,000 naira. Okay, we now have the profit after tax here for the year. Profit after tax. After tax. That is 49,000 naira. Thousand naira. Okay. So we now have deductions and transfers. Okay. We have deductions, deductions, slash transfers, transfers. Okay. So we're told that we should write up preliminary expenses. So we are writing up preliminary expenses. Preliminary expense. Okay. That is 1,700. We're told that we should transfer 6,000 to general reserve, put down to capital reserve. Okay. So just say general reserve. General reserve. Reserve. Okay. That is 6,000. We also have capital reserve. Capital reserve. Capital reserve. That is 4,000. 4,000. Okay. So we have half of the dividend. Okay. It was said in the question that half of dividend due to the on the preference share had been paid in July 2020. Let us calculate the half of the dividend. So we have one preference dividend. Preference dividend. From the question, the preference dividend is 6%. That is 6% multiplied by 1 year multiplied by 40,000 units. Okay, that will give us 2,400 naira. So we were told half of what the preference share dividend was paid, and half was not paid. Okay, so we have half of the dividend on the preference share that has been paid in. So dividend paid is the charge against profits. Okay, paid equals to 1,200. Okay, unpaid is 1,200 because it is half. So this will give us 2,400 naira. Okay, so we have it here. Preference dividend, which is the one paid. Okay, which is a charge on the profits of 1,200. Now we also have other information. The interim dividend of 5% has been paid on the ordinary share. So let us calculate the interim dividend. Interim dividend. Number two. Number two. So let me write that number two. Interim dividend. Okay. Interim dividend. So we have interim dividend as 5% of ordinary shares. 5% multiplied by 1 year. The ordinary share is on 20,000 units. 1,000 units. Okay. That is, we have 6,000 there. 1,000 there. Okay. So let's post that interim dividend. That is 6,000. Okay. The next one is we have, what do we have next? We have and the directors have proposed a final dividend of 10%. So final dividend. proposed dividend or final dividend, proposed dividend on the ordinary shares. Okay, so we have, let's put something down there. Number three, proposed proposed dividend. Proposed dividend we have, that is how much? That's 10% of 1 naira multiplied by 120,000 units of shares. That'll give us 12,000 naira. 12,000 there. So we have both dividend as 12,000. Okay, so we've been able to do that. So let us now look at, so we are going to add this up. We're going to add up all this. We're going to add up. Okay, so let's add them up. Let me check out the calculator. Let's add up. So we have 1,700, 1,700, 1,700. So let me just add that together. 1,700 plus 6,000 plus 4,000 plus 1,200 plus 6,000 plus 12,000. So we have 30,900. Okay, at the end of the day, we have 30,900. So this is 30,000. This is 30,900. So some cases we may have this called balance carried now, but this is should be the retained profit. Retained profit. So this has not been appropriated. Balance carried down. So this is different between this addition of this and deduct this from this to give us the balance carried down. So let's see what we have there. So this is 24 plus 49 will give us the addition of this and this, that is both. Addition of this will give us 73,000. So minus 30,900, 73,000. This is for 2,100 as a balance. The retained profits, 2,100. So at the end of the day, we have 73,000. And we are done with our operation account. So on this note, we are done with our operation account. The next thing is we're going to create a balance sheet extract. Okay, so let's go ahead and go and create the balance sheet extract. So let's call this the balance sheet extract for trampoline. Trampoline limited balance sheet extract. So let's take note that this is also known as the statement of financial position extract. Okay, so we have an error sign, we have an error sign. So in the question, do we have anything that has to do with assets? Assets. From the question, we don't have any assets detected or given in the question. So what do we have? We don't have fixed asset mentioned, because this is just an extract. Okay, so normally we're supposed to say assets. So let's say our current assets, or non-current assets, sorry, or non-current assets. We don't have anything here. Our current assets. We don't have any information in regards to this. So we have so we don't have, let's see, current liabilities now. This. So current liabilities, we should have the proposed dividend. proposed dividend. Proposed dividend on ordinary share. Ordinary share. That is 12,000. That's 12,000. Okay. So this proposed dividend of 12,000. So we transfer that to the balance sheet. Okay. We've done this. So the next one is um the what's it called, the preference share dividend. The preference share dividend. Preference share dividend. We have it as 1,200. 1,200. So at the end of the day, we have 200. 1,200. Okay. So let's move on. Let's move on. So the next one is to now look for our non-current assets. Non-current assets. So non-current assets. Non-current assets. Okay, we have so not non-current assets, non-current liabilities. Pardon. This should be non-current liabilities. This is non-current liabilities, not assets. So we have the non-current liabilities. Let's write that there. Liabilities. Liabilities. So the non-current liabilities, okay. Do we have any? Do we have any non-current liabilities? So since we don't have, let us say finance by. Let's say reserves. Reserves. We have general reserve. Reserve. Our general reserve is 6,000. We have capital reserve. So this is where all the monies are going to. Capital reserve. We have it as 4,000. 4,000. Okay. So after the capital reserve, we have profits. So we have profits. That is the retained profits. Let me correct the retained profits. Retained profit is like what we have here. This is for 2,100. This was 2,100. Okay. Let me just quickly do this. Let's say we have our capital, which is financed by. We have the authorized share capital. Authorized share capital, okay, which is ordinary shares. Shares we have 160,000. We have preference share. That is 40,000. So at the end of the day, we're going to add 20,000 as the authorized share. So what we are saying is that the authorized share is just the maximum number of shares that an organization you know, can raise in any given financial period of time. Okay, so we can only use 20,000 as financed by 20,000. Okay, now that's our authorized share capital. So we have our issued capital. Okay, so our issued capital. So since we don't have anything to interact with this, to just put a line, do it as 1,000. So what we are concerned more about is the issued capital. Okay, The issue capital is divided to ordinary because we usually this out share capital. We have preference, preference share capital, which we issued. So we issued out for ordinary share capital we use out 20,000, and we have 40,000, that is 160, which is 160,000. So 160,000. Okay. So ordinary share capital. So let us move on with the next one. So we have so let's add this up. Let's add this up too. So we have 40,000 plus 4. That's this is 40,000. This is 40,100. Sorry. This is for 6,000, and this is 52,100. This is 52,100. Now, the interim dividend has already been paid. So, assuming that it has not been paid now, it becomes a liability. But in this case, it has been paid and charged against the profit. Okay, it has been paid and charged against the profit. So we don't need to bring it down to the liabilities again because it has been paid already. So we have our figures here. So let us add up. Let's add up. So we have from our current liability, our current liabilities 13.2, and non-current liabilities we don't have. So non-current liabilities we don't have any figure there. So this, let's bring this down here, 13,200. Okay. So assets and liabilities, let's add everything together. So we have 160,000. So let's add up 160 plus 52. That's 212 100. 212 100. 212 100 plus 13,200. Let's do the math. 212 100. 212 100 plus 13,200. 100. So we have 0 0 3 5 2 2. That's 225,300. So let's just scroll down. So that's 225,300. 225,300. Okay. That's the answer. Okay, so 225,300. So when we add up, okay, the figures, we're gonna get 225,300, which is the addition of the liabilities and the shareholders funds, shareholder financing. So at the end of the day, we have 225,300 as total figure for this balance sheet after we have recognized the reserves, the liabilities that we have in the question, and also the financed by, which contains the issue of shares at ordinary, both ordinary shares and the preference shares as authorized in the company at 160,000, as you can see here. So this is 120 plus 40,000. So out of 200 units, 20,000 units of shares, we only what, out of 200,000 authorized units of shares, we only issued out 160,000. So at the end of the day, Our balance sheet extra shows a figure of 225,300 naira. So thank you so much for your time, and please do not forget to subscribe to my YouTube channel and also click on the notification bell so that you can be notified whenever I drop a new video. Thank you very much, and I'll see you in the next video. Have a great day. Bye bye.